Hi everyone, before we start the show, I'd like to point out that I am not a financial advisor. I don't have a finance background. This channel, the show, is sponsored by the XX Network. Being honest may not get you a lot of friends, but it'll always get you the right ones.
World's largest issuer of crypto exchange-traded products, ETFs, ETPs, and we have them listed on stock exchanges all the way from Australia in the east, across all of Europe, and we just listed the Middle East first in Dubai 3 weeks ago. As to the why, I think a lot of people like talking about once-in-a-generation opportunities. I think if you look at history, reserve currencies in the financial system does not often change once in a generation. And so crypto to me is a world-changing technology, and it's more of a, let's say, once in a century, once in a couple of centuries kind of opportunity. And it's early, and I couldn't be more excited to be here.
Though many people complain about the market dip, we must think of all that has occurred in the past few years. The world is changing, though we have become immune and desensitized that we cannot see it. Value and price are not synonymous. We have the opportunity for the world to save trillions by simply reducing fees. And this is the most basic economic benefit of digital assets. These systems are evolving every day, becoming more complex and capable of different use cases. When these digital systems come together, we will see a world becoming more efficient and cheaper. Frictions will be removed and money will move across the internet as easily as information does today.
Sort of everyone stuck. And there I was in the West Coast, and I met with Coinbase and Ripple on the same day, on that fateful day in 2015. And over the course of those two meetings, of listening to Chris Larson at Ripple and to Brian at Coinbase and hearing their story, their passion, but the reimagining of the rails, the reimagining of the infrastructure captured my attention. And at that point,
Tim Grant, who has played a leading role in numerous initiatives such as R36 and Project Helvetica, is highly influential in the fintech sphere. He entered this domain through an introduction with Chris Larson from Ripple and Brian Armstrong from Coinbase.
Yeah, I think Nick makes a really important point. And in fact, just this week, we've seen Rishi get out of the gates really, really strong. If you go back to April, you know, there was always a big question mark about the UK. Is it really going to support this or not? In April, Rishi, who was then Chancellor, and John Glenn, his secretary, made a very big statement that was heard around the world of you want the UK to be a crypto hub.
Digital assets hold the potential to heighten efficiency and transparency while also lessening the costs. They can assist in cross-border payments and foster financial inclusion. If England were to embrace digital assets, it could lead to a more prosperous economy.
But now Rishi's in power. He's got John Glenn back with him in the cabinet. He's got a wonderful gentleman who I met last week called Andrew Griffith, MP, who's now the FST. Now, why is all this important? So there's a financial services and markets bill that just went through the UK Parliament this week, and a last-minute addition that was put in by Andrew Griffith last Friday basically posits, and this has been passed, so in theory this is on its way to a 2022 bill, that crypto will become within the regulated perimeter. What does that mean? That means that any regulated entity in the UK, if this passes, will be able to trade unencumbered crypto assets overnight. Now, it also means if you weren't regulated, you cannot, so there are other consequences. But this is pretty unusual on the global stage to have just basically, without question, recognized this as another risk asset that should be allowed in portfolios, should be traded alongside everything else, should be regulated, should have all the appropriate modern risk management elements around it. And I think we might find, this seems to have gotten less press than I think it should. We might find in time that this is a turning point globally, and other jurisdictions might realize it's time just to think of this like another asset class.
The financial markets and economies are revealing their vulnerabilities. At the same time, crypto assets are being accepted and onboarded. Digital assets can resolve some of these issues of breaking down. Now, they won't solve the debt problem, but if they reduce the frictions and make the world more efficient, it will breathe life into a struggling economy.
And to your point about volatility, I mean, at one point last week, Bitcoin had lower volatility than UK rates and currency. So that's kind of mind-blowing.
Interesting.
So that kind of really changes the game a little bit when we talk about volatility.
The new system is becoming more reliable. The more wealth that is funneled into this system, the more stable it is.
It's been quite prominent here, and when I was the CEO of Six Digital Exchange a couple of years ago, we were working on Project Helvetia with the Swiss National Bank and using our infrastructure to create this. So I have the first-hand experience of working with the government to actually make this a reality. And we did prove that it could work. Why is it important? Well, because if you can bring the traditional institutional financial system, which is, by the way, where all the money is, like by
Right.
orders of magnitude, then you're able to settle in a way that could be more, the settlement element could be much more efficient. That just as a single stepping stone, not saying that's the end game, not saying that maybe that as a stepping stone ultimately demonstrates the level of efficiency we can get to, which brings more sort of belief from the institutions and the regulators, and then it goes out of existence. I could see that being a sort of route where we go. But that's not that far away. I think ultimately the question is that going to happen? I think you'll see Switzerland and some others do that pretty soon. And these are big, material economies that matter from an institutional.
The traditional world is breaking down and migrating to a distributed ledger. The shift is taking place, and we are much further along than people realize. If you look at the facts and circumstances objectively, you'll see that whole nations are embracing this change and moving from pilot projects to real-world use cases.
A president who's president of all the people, who has a bipartisan cabinet and can draw together to do a restructuring. You need a restructuring of the system because the profit, I'm sure this is going to be misunderstood, but the profit system has to produce the objective in which there's better equal opportunity and all that.
Ray Dalio is one of the most successful investors because he can anticipate the future and position his portfolio. He talks about the wealth gap and inequalities, which is something that distributed ledgers have the potential to address. Financial inclusion is not just a buzzword. It will have a real-world impact on society by including everyone and offering the opportunity for participation.
Need to ask ourselves is, how do we rebuild? And we don't rebuild if we don't trust. If politicians don't trust one another, if businesses don't trust one another, if politicians don't trust businesses, there is a broken system that we need to rebuild. And trust is where it starts.
The transparency that blockchains offer is a solution to a loss of trust.
There's a lot of good things going on. The good things have to do with innovation. All of us are exposed to incredible amounts of innovation that can go on. If that can go on in a peaceful environment so that it produces productivity, we will continue to raise our living standards. If we can remain peaceful and empathy, mutual consideration, thinking about the whole, and produce productivity rather than produce waste. I think those are the things that are conceivable of how to do it. I don't know anybody who is talking about doing it that way, but yes, there's a way.
Wealth does not lie in money, but in goods and services. The more affordable these are, the richer we are. More demand creates more jobs and more production. Printing money only serves to dilute the supply of goods and services, and everything is being repriced daily. The efficiencies technologies offer make goods and services cheaper to produce. For example, the grocery store is charged 2% of every payment with a credit card. The 2% is not absorbed by the grocery store. The 2% is priced into all of the goods.
Clearly in the right group. But look at Andreessen Horowitz. These were the guys that figured out the internet before everybody else and really made huge long-term bets in the late 90s that ended up being the backers of some of the biggest companies of the world today. That same company raised $4-5 billion like that earlier this year. They didn't even have to flinch, and they got that money. They see this. So the smartest guys in the room who understand how this technology and network effects really work because they've done this before and multiple cycles, they're backing it. And to Hani's point, this is the long-term investment. So this is already underway. We had something like 23 billion of VC investment last year. We've already eclipsed it this year, and it's a bad year for this space. So don't take our word for it, but do.
The experts are investing in this area because they see the potential that we see. Although there is a lot of hypes, the facts speak for themselves. We know the capability of this technology and the impact it will have on everyone's daily lives.
To me, the ineffectiveness of the fiscal side, whether it's from a policy standpoint or governments and their ability to react to the change and deal with the change. You kind of look at the stablecoin, digital currency developments, and governments kind of scrambling to catch up to innovation in the payments area that Facebook is bringing to light. Whether you think Facebook has the good or a bad solution, put that on the side. There is a problem to be addressed in the friction around payments, particularly internationally in the world. It's a problem. It's an issue in the world that needs to be dealt with. And the question is, can governments react to these sorts of private sector ideas? Because the innovation, I think, is moving faster than the fiscal side, has the ability to catch up. So I worry about that, and you couple that with the fact that a lot of the innovation is driving a disparity. It's creating more information flow to the masses around the world and giving them a sense for what's available, what their opportunities should be, and that's why I think you're seeing some of this dislocation. So I worry about that disconnect, and I think the fiscal side, politically and policy-wise, needs to catch up and kind of pick up the slack, which I think is a real risk in the world.
No, what do you...
Everyone is waiting for the rules of the road to be established. The cars are running, waiting for the green light. Investments, proof of concepts, testing the infrastructure. It's all been built and is still in progress, but once we see the light turn green, the speed will drastically pick up.
Which I probably shouldn't say. When you enter social media, they should authentify who you are. It'll get rid of all the bots, all the fake emails, all the chat. It'll make you legal under law of the land. They should authentify the way you are, just like you enter a banking system. And number two, they should give you a menu of choices for how you want to be, what algorithm you want to use. Here's our algorithm, here's one that favors this, here's one that favors that. They should give you a choice as opposed to manipulating you.
What would you choose?
I don't look at any of that crap.
Speakeasy is a new private and secure social media platform. It is a DApp on the XX network, which is a decentralized network comprising approximately 400 nodes. Every time you send a message, it becomes encrypted and then broken into mixed pieces. None of the nodes know that they have a piece of the encrypted information. While the message is being sent through this decentralized network, the metadata is shredded. This means your IP, your identity, location are kept out and are undiscoverable. Centralized social media platforms lend you your identity. With Speakeasy, you actually own it. You can create a public and private group chat similar to Telegram or Discord. Try it out at alpha.speakeasy.tech.
Obviously, of the events of this year. So I think, listen, we cannot deny we are in a very difficult crisis from a global perspective. And in my view, it takes, in many occasions, a crisis to work yourself out of it and to start resetting some of the issues that created the crisis to start with. You have to hit a wall. And I think, whether we are going to a recession or not from a global perspective, there's no doubt there's a reset that is absolutely necessary, and I think is going to be happening within the next 12 to 24 months.
At this conference, attendees included bankers such as Jamie Dimon, CEO of Chase, Ray Dalio, the billionaire, and David Solomon from Goldman Sachs. They openly discussed the idea of a reset, which is now the norm between them. Yet, when everyday people are introduced to this idea, they think that we're wearing tinfoil hats.
I'm here to introduce Confield CBDC. Confield CBDC is a proof of concept where we can issue commercial banks CBDC by onboarding them within a central bank system. In this case, these commercial banks are able to be connected with users using the FIEL, which is the Mexico Tax Revenue System digital certificate, and then these users can actually open accounts against these commercial banks. So in this case, this is Maria, which is actually opening an account against BBVA, and then...
For example, in this demo, it shows Mexico using the XRP ledger to send value to commercial banks such as BBVA, Santander, and others. A reset is not some absurd idea. It has happened in the past and will happen in the future.
So we've not only filed an amicus brief, a Friends of the Court brief in supporting the Ripple litigation, we've also done it with the Grayscale ETP. And just broadly speaking, these are issues of, fair notice, meaning regulators need to give the market fair notice of expected conduct before they take an enforcement action. I think it's been very clear over the past 5 years. The rules have been unclear. It's not clear how to what the SEC is asking for generally. In July, we actually filed a petition for rulemaking, which is very unusual for an entity to ask a regulator to be regulated. And the reason we did that is because there's a lot of uncertainty on where different regulators have authority. And what's missing today as a digital asset securities market.
I follow Ripple and XRP very closely. I watched Garlinghouse go from his everyday self to being ecstatic and on cloud nine. In recent interviews, he went from being very buttoned up to swearing on stage. Even on Twitter, he's becoming more arrogant. To me, it's very revealing. We watched foundations like the Blockchain Association, which was anti-Ripple and XRP, do a complete 180 and support Ripple and XRP.
There is no way to tokenize equity or debt, trade it, or issue it. There's no rule set that exists today under the SEC's purview to pursue that. And there's a lot of ambiguity on whether or not the SEC should have authority over commodities. And that's what the DCCPA is trying to help draw the line, and what the CFTC's authority over commodity is, and what the SEC's authority over securities is. And so the reason we file these amicus briefs is because all the policy as of to date is being done in the courts. Right, so the decisions the courts are going to make are going to help draw these lines, and so until we have affirmative notice and comment rulemaking at agencies and legislation passed to mandate that, our only recourse is to have this discussion, debate in the courts, and that's why we filed those amicus briefs in support of Ripple and Grayscale.
The whole industry is supporting Ripple because they can force clarity. They can force the U.S. to push out regulations. Elon Musk, who has had problems with the SEC, commented on Garlinghouse's tweet. ODL would work very well for multinational, international, billion-dollar companies. They're using the old banking system and charged a hefty premium while ODL is cheaper. Another possibility is Twitter could get rid of bots by introducing micropayments. With Ripple's crypto liquidity hub, users would be able to select digital currencies as a payment. The reason bots and spam exist is because it costs nothing to send 1 billion emails. If you're charged a fraction of a penny, the economics would no longer make sense, and the reward would not be worth the effort.
A failure of just taking a risk-based approach to these innovations. So exponential tech should produce exponential societal outcomes, but it's going to require new thinking. Last point I would make, the United States won the real digital currency space race when our political leaders gave us a destination. Thus far, the totality of this conversation is about risk and about preservation of status quo. And in my mind, status quo is failing a lot of people.
The current system of dollar hegemony and loose monetary policy is failing us. However, this exponential technology offers us exponential opportunity. I am optimistic for the future, but we will encounter some turbulence first. When I went to school, they asked me what I wanted to be when I grew up. I wrote down happy. They told me I didn't understand the assignment. I told them they didn't understand life.